So Wall Street has a theme. Usually it's not what we think it is. No matter how much time you have been in the market, you will be left holding the bag one time or the other. So what can you do? Now, in the last few days, we have seen everything, and even stocks like Tesla, Amazon, Google, Apple, which are poised to grow in 2022, were also tumbling. I've been talking about these stocks on this channel, and my confidence in these companies make me continue to invest in them without any fear. But last few days, looking at my losers, I was just questioning myself. Why do I even bother owning so many stocks? Wouldn't it make sense to just keep 10 stocks and forget about everything else? Well, some of you might be asking this question as well, but what I'm sharing with you today will show you that opportunities are always there. We just have to look at them with no emotions attached. So today we are going to do just that. What I'm sharing with you is Wall Street opinion, and there are no emotions attached with these projections. Straight up numbers and facts. So let's get into the video, and please give this video a thumbs up and consider subscribing if you like content like this. So now I'll share just one chart. That's it, just one chart for today's video, and it's going to show you the expectations for next 7 quarters. Yep, we'll see the data all the way through 2023 quarter 3, and make sure you save this video in a playlist so you can come back and check this video out, because this video is showing you what Wall Street is expecting in the next 1.5 years. Okay, so this is a chart right here, and I will try to explain one by one. This looks like a very busy chart, but if you just pay attention over here, this is quarter 4 of 2020, and then this is quarter 1 of 2021 all the way, and they are projecting quarter 3 of 2023. So right now we are right here that we are expecting the earnings to come out. So I'm going to go ahead and mark this over here. We are right here right now. And now they are saying that these are the different sectors, and this is the expectation that Wall Street has from these sectors going forward. In my previous video, I talked about there are certain sectors which are winners. If you have not watched the video, then I'll link it up here. Check it out. So that video is of course talking about there are few sectors. Energy, minerals, industrials are basically huge winners for Q4. Now, pay attention to this. In the energy sector right here, I'm going to go one by one. So this is energy over here, and let me actually highlight it so we can follow along better. So this is energy right here. And as you can see, the energy sector, you can see the growth has been kind of non-present in the last year because everybody was focusing so much on the big tech, so much on the growth, so much on momentum that they kind of, missing out on energy and the investment in energy. Now, if you pay attention over here, we have about 170% increase in energy on Q1 of 2022. We are not talking about Q4. Q4 numbers will be, of course, surprising because energy is supposed to do really good. But then going into Q2 of 2020 or Q1 of 2022, then Q2, then Q3, we have this huge gain percentage that Wall Street is expecting. But look what's going on. From the first 3 quarters of 2022, the sector is supposed to gain. Then after that, we have a negative, or the money is started to come out. This is a rotation that I'm talking about. This happens all the time on Wall Street, but what we do as retail investors is that we get emotionally attached with a stock and we think it's going to continue going higher and higher and higher, which is of course not the case. So if you can see over here, we have this Q1 of 2021 where we have 170.6%, that's what they're saying, year-over-year growth in the energy sector. So that means there is a lot more money that has come into the energy. Then after that, they are expecting about 51.8% growth year-over-year in Q2. Then in Q3, and then Q4 forward, it's going in negative. Then let's take a look at financials, as we know that some of us are heavily invested in financial sector. Now, if you look at financial, and I'm going to change the color so we can track this. This is financial right here, which is under energy. So in the financial sector, they are expecting that Q4 we have actually 0.4% growth year over year. That means nothing. There is no growth from a year ago. So as we know, some of our stocks are back where we started back in 2020. And now they're saying that in Q1, Q2, actually this right here. So in Q1, Q2, and Q3, we are expecting negative growth. That means the financial sector is not going to do well for the first 3 quarters of 2022. Again, this is not my opinion. This is Wall Street opinion. Exceptions are always there. So they're saying that basically we are not going to do that much growth in the financial sector. And then Q4 of 2022, we are going to see a rotation and we are going to see almost double-digit growth by Q3 of 2023. So starting Q1 of 2023, we are going to see double-digit growth, which is amazing for financial sector. But look what's going on over here. healthcare or real estate, healthcare, industrial, everything is basically growing, while information technology is right now as declining. So we have about 15.2% growth in Q4 of 2021, year-over-year growth. This is all year-over-year numbers. Then in Q1 of 2022, that growth is going to be muted to about 6.6%, half of what it grew in Q4. So the pain in information technology is going to continue, but pay attention to this. This is FANG right here. FANG is basically Facebook, Amazon, Netflix, and Alphabet combined right here, or Google. So FANG over here is talking about that we had negative growth in Q4 of 2021, and we are expecting negative growth, year-over-year growth from the previous years going into Q2 of 2022. Because we had this amazing growth in 2021 of all these big high-tech firms that we can see, we have about 148% growth in Q1 of 2021 from a year ago. That's insane. And then after that, we are not expecting that gain. We are actually expecting negative gain going into first quarter of 2022. Then in the third quarter of 2022, right here, we can see the gain, a double-digit gain, almost 18.2% year-over-year. That will come back to FANG, which is basically Facebook, Amazon, Netflix, and Alphabet. Then over here, we can see that these growth or the trend will continue for the remaining time, which is starting from third quarter of 2022 all the way to third quarter of 2022. Double-digit growth in these companies, or in these 5 major companies. And then material, the same story. Materials right now are expecting huge growth. Look, 60.7% growth in Q4, about 34.1% growth in Q1 of 2022 for materials. Then after that, they are going to be in a decline, and we are seeing some double-digit decline in fourth quarter of 2022 and first quarter of 2023. Again, no emotions attached. This is a market rotation. Right now, energy, materials, industrials are doing well, but they will not continue to be doing well in the coming days. So this data that I'm sharing is really, really interesting because it's showing the trend where it is right now. It's showing the trend that how long it's going to continue, and then when we will see a decline and a rotation back. So now looking at the following data, it got me thinking about my leaps that I'm holding. I have leaps on Google, Tesla, Amazon, and Microsoft. Now, so far, I'm still profitable on some of them, but on some I have started to lose, or I have started to see red. But as you know, options have insane theta decay or time decay. And if we are estimating FANG to improve by second quarter of 2022, so as per the data right here, FANG is going to see a negative growth or year-over-year growth until second quarter of 2022, and then it'll come back into the positive, double-digit positive territory after the second quarter of 2022, when the supply chain and stuff will get eased up a little bit. Omicron has really pushed these timelines forward. Then I'm better off getting rid of my leaps now and then buying them back when I know market rotation is near. Well, this is not a financial advice, so I could be completely wrong. But looking at the data I just shared with you, it kind of makes sense. But there are always exceptions, and I'm going to make exception for Tesla. I'm holding on to my Tesla leap, but I will definitely get rid of my Google and Microsoft leaps and will wait to buy them back when we see supply chain issues and Omicron settle the dust a bit. I might miss out, no one can time the market, but after seeing so much red in the 3 days, I would rather be safe, and I always say this: profit is profit, and another one, that no one ever lost money by taking a profit. I hope I provided some value, and if you like the video, then give it a thumbs up and consider subscribing. For more one-on-one conversation with an amazing group, join our Discord and Patreon. Links are in the description below. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.